Hi there folks. Now this week's video, a bit of a rehash from some earlier videos that I put out here on the channel. But it's a rehash for a very good reason. Because I think it is the number one reason why many that come into the markets for the first time end up as donators to the market. And that's because they don't do this correctly, if at all. Yes, it's backtesting again. So today I'm going to show you exactly how I think you should be backtesting using some of the popular trading platforms out there. I'll also talk about the pitfalls and why many are backtesting in the wrong way, leading to false and inaccurate data, which is why the data they see in the backtesting doesn't always match the data they see when their hard-earned money is on the line. So we'll talk about the pitfalls as well. But before you even consider backtesting, before you even start on that journey, of course, you need to have a trading strategy. Now, we put out some trading strategies here on the channel. You can use one of mine, you can use some others you may have found elsewhere, or you can, of course, develop your own, which maybe is the preferred approach. But you do need to have a strategy. Backtesting is important for two main reasons. First of all, so that you know your strategy's got an edge over time. But most importantly, is that you know how the strategy performs over time. You know all those metrics: consecutive wins, consecutive losses, drawdown, average win, average loss, and so forth, profit factor, expectancy, all these things we've covered in the past. But you've got to have a strategy, and it's got to be written down. Remember that video I put out there a while ago, the cycle of doom? Got over 2 million views at the moment. It's why many traders fail, because they keep changing, tweaking strategies. Get your strategy written down. Put it on a checklist that you have to click off when the rules align. This should apply in your back testing as well. If you get it laminated, you're going to be less inclined to start changing things when you hit that losing streak, which will happen in back testing, it will happen in demo trading, and it will certainly happen in real life trading as well. So get the strategy written down with all the trading criteria. And when you sit down with your back testing program, make sure you stick to it. Set yourself some time, is it 3 days, 4 days, a week, to back test that strategy in full. And remember, keep the results of your back test. No point just clicking away saying, yeah, that's a winner, that's a loser, that's a winner, that's a loser. You've got to journal your back testing results. So then you can go back, look back, and see exactly how that strategy has performed. I'll show you an example of a journal again in a moment. So this week's video, we're going to talk about the 3 ways that I think you should be backtesting. Come on, let's have a look. Okay, so now let's look at then the 3 ways that I think you can backtest. Now, of course, there are plenty of different trading platforms out there. I'm going to focus on the common platform that most traders use these days, certainly when they're starting off, and there's absolutely nothing wrong with it. Certainly if you're trading in the Forex market, and that's the MetaTrader 4 and the MetaTrader 5 platform, MT4, MT5. I'm just going to focus on MT4 because that's the one I'm more proficient at. Now, as I said a moment ago, before you even start to backtest, a strategy, you need to have a strategy, and you need to have it written down on a checklist. No point having a strategy up there with rules up there, because the moment you start to backtest that strategy, things will be put into the strategy, things will be taken out, you'll be deviating it before you know it. You need to have a defined strategy. So once you've got some ideas, jot them down on paper, put them into a checklist, and then set the times of your backtesting that you're going to do. Maybe you're going to scroll back in time to a certain period of the year, maybe the beginning of the year. Maybe you want to scroll back to a couple of years, 2 years, 3 years, 5. Personally, I think the more data that you have for the backtest, the better. I say normally a minimum of 5 years worth of backtesting. I know that sounds a tall order, but there are benefits from having more data, as you can imagine. So you've got the rules of engagement on here. I can give you a copy of these if you wanted it, but these are just a strategy that I backtested many years ago. But the most important thing here, and this is where most people fail in their backtesting, if they're even bothered to backtest in the first place, and it's the time. The time that you're backtesting. A lot of people will come onto backtesting to say, right, I'm going to start in January 2019 or whatever, and they just scroll through. Remember, the Forex market is 24/7. 24/7, 5.5 days a week. Now, there's no way in reality that you are going to be trading 24/7, 5.5 days a week. Some of you have day jobs. Some of you have shift work. Some of you are able to spend 5 or 6 hours in front of the screen. When you're backtesting, you should only be backtesting the data that is relevant to the time of the day that you'll be trading. There's no point seeing a strategy set up at 3 in the morning because you're not going to be at your desk, chances are, at 3 in the morning trading away. So this is not realistic data. Remember, different time zones of the day around the 24-hour period, markets will behave differently. Often, for example, in Australia, the Asia Pacific zone, normally there is a contraction in volatility. Markets tend to range more in these periods. Certain currency pairs will behave differently in these periods. In times of high volatility, when the European session is overlapping the US session, these are high volatile periods. If that's your time, that is the data that you should be looking at. Remember, we want our data to correspond to our real life going forward. Otherwise, it's basically useless. So that's the first thing, and that's where many traders fail. So keep an eye on the time at the bottom of the screen, and you can do that by looking at the crosshairs. If you scroll through, you'll see at the bottom of the screen there the different times. That's 10 a.m. and 12:14, what have you. Also remember though, using the MetaTrader platforms, the times that you see on the MetaTrader platforms are relevant to the broker's server. So it might be different than your actual time here in the UK. For example, this trading platform, at the moment of the time of recording, it is now just coming up to midday, but my last candle is showing 1400 hours. That's basically 2 p.m. So my broker platform is 2 hours ahead of where I am in the UK. Make sure you're aware of that when you're sorting out the times that you're going to backtest, and no way of changing that. Unfortunately, that is broker dependent. Now, before we get into the actual mechanics of the backtesting, I want to talk briefly about how you record the results. Now, here on MT4, if you're backtesting using this manual process that we're going to go through today, there's no way of recording the results apart from doing the hard work yourself, literally writing them down, putting them in a trade journal. And I think this is an important process. Remember, backtesting isn't done in a couple of hours. Think about this. You're thinking about maybe doing this for the long haul. You've got to put the work in. Unfortunately, this is hard, laborious work. But you need to journal the trade. Now, this is an example of a trade journal. This is not an interactive trade journal. It's just something you maybe take a screen grab, have a look at some of the criteria. You can maybe develop your own. There are some out there that you can buy, some other places out there maybe giving them away for free. But it basically gives you an idea of what you should be recording. You've got the strategy name, the pair, buy, sell, entry price, percentage risk, lot size, stop loss, take profit, target one, and so forth. Comments as well. Was it a good trade? Was it a positive trade? Did you not take the entry right? Did you move stops too quickly or something like that? Remember, you've got to treat the backtesting as reality. No point trying to fudge the books here, because all you're doing is cheating yourself. And then you'll be able to work out all these metrics down here as well, just above my head. You'll see all the win rate, the loss rate, the profit factor, the expectancy, and so forth. So you need to have this form of journal in order to journal the results of your backtest. Now, I know some of you are maybe not familiar with Excel as others. You can do this manually with a good old-fashioned pen and paper. More work, I know, but if you want to get anything out of this, you need to put the work in before to give yourself even half a chance at making this successful. Okay, so once you've got your journal sorted out, let's get on to the backtesting. Okay, so we'll start off by looking at MT4. The first thing you need to do when you get onto an MT4 platform is basically go to the price chart, right click, hit properties, and unclick here chart auto scroll, and click there. Now this will allow you to scroll back in time to begin your backtesting period. So if I could scroll back, say, to the beginning of the year, around that time, that's when I'm going to start my backtesting. But here lies the problem with backtesting manually on MT4 and MT5, in that for a lot of strategies, certainly my strategies, I like to use the top-down analysis approach. I like to look at the higher time period chart. Here you'll see on my screen I've got the hourly chart. This is where I'm going to enter the trades, looking for my strategy rules to align. And on the right hand side of the screen I've got my anchor chart, which in this example is the 4-hour chart. You see it up here. But with MT4 it doesn't auto scroll back together, so I can only auto scroll on one time period chart. So you may have to do the 4-hour manually as well. Again, a little bit laborious, but again, this is free. If you want to do it this way, it does take a little bit more time, but be aware of that. Be aware of that. Okay, so once you get onto your price chart, basically by hitting F12 on the keyboard, it will advance the candles by one candle at a time. You may be hearing me click away there, seeing the candles develop. So you look for your strategies to align. You've got your strategies written down. You think, well, hang on, this could be a setup. It ticks the boxes. You're making sure that you're trading in your time zone. Again, by scrolling through at the moment, this is at 5 in the morning. I'm not going to be around at 5 in the morning trading this. So I want to make sure that I scroll through at least to 8 in the morning when I normally start my trading. Okay, which would be 10 in the morning on this broker platform. So this is basically when I would start my test, looking for my rules to align, and then take the check and record the results, whether it will be a profit or a loss, and record that in your journal, and then on to the next trade. Now, the important part of doing this, in fact, with any back testing, is that you don't suffer from a forward bias. For example, there's no point back testing a strategy where you know the results in advance. For example, this year, we know in the last 3 or 4 months, the US dollar has been on a tear to the upside. There's no point knowing this and letting that influence your trading. And I'm not taking that trade because I know the dollar's going up. That's a bad way to backtest. So be completely unaware of what's going on. That's why sometimes it's good to just scroll back and not even maybe look at the clock. And again, you have to do each individual currency pair individually as well. So make sure you don't get caught with the forward bias. I've seen many people backtest before say, well, I won't put that in my journal because I know it's going to get stopped out. Well, that's just not realistic. You're just cheating yourself. So that's backtesting on MT4. It is the cheap and free version. If you are on a budget, this is definitely better than not backtesting at all, but by no means the best way to do it. Now, the other trading platform that many traders use when they come into trading for the first time is TradingView. So we'll look at now how you manually backtest briefly on TradingView. Now, unfortunately, it is quite similar to the MetaTrader platforms in regard that you're not able to scroll back the multiple time periods in sync. You can't move them all back together. And I don't really like that so much personally. I like to see the time periods all set up there so that I can see the bigger picture all on one screen. I've got my support and resistance on the daily and the 4-hour, and of course then I can see if the rules are aligning on the entry chart. In this case it will be the 1-hour chart. But this is the best we got. Now I do think the TradingView platform is better than the MetaTrader platforms in its simplicity in scrolling back, and I'll show you that now. Okay, so let's assume we want to be trading on the 1-hour time period chart, and my higher time frame is going to be, say, the 4-hour chart. So here we've got the dollar against the Canadian dollar. Take the 1-hour higher, and here we see the chart. Basically, each candle represents 1 hour. Now, what I need to do here is click this replay button, and it will pull up a vertical line. In my example, it is blue. Could be any color depending on how your settings are. Every time you scroll back, just putting your click on the mouse and taking it back in time, it basically starts from where you want it to, just by literally clicking. I can start maybe say the 1st of July by clicking there, and now that takes the most recent candle on the right hand side of the screen to the date I selected. Actually was the 2nd of July. Now, if I need to scroll through, I would literally click this little button here. You'll see it here. Click that. Every time you click that, it scrolls through one candle at a time. But as I say, I like to use multi-time period analysis as well. Make sure that it's not conflicting with any major support and resistance, and that it's in tune with the higher time frame. So what you can do on TradingView is literally quickly Go up to the higher time frame, click on there. Basically the date stays the same, so we're still on the 2nd of July. You can make sure that everything is still complying. So you can do your analysis that way around, and then back to the hourly chart and wait for your strategy rules to align, and then take the trade. Of course, then you take the trade, you put it into your trade journal with your stops, with your profit targets, and let it play out to see indeed if it was a winner. Okay, so just before I finish here on TradingView, let me say there is a quicker way to get to your start date of your testing period. If you go to this little icon down here, I've got to move my webcam so you can see it. We've got the different time periods down here, and you go to this calendar icon. Here you can click the date when you actually want to start. So for example, I might want to start on April the 1st. You can select your time as well, and it will just basically jump back down to the selected candle. Click go to, and there it is. Of course, then you need to put on your replay. Maybe start at a couple of candles before, and off you go with your back testing. You can scroll through in the regular way by clicking on that button and jumping to the higher time frame at any time to make sure that the rules apply. Or that you're not making any trades right into big support and resistance, the top-down analysis approach that we often talk about. And on a final note, if you want to change the time of your particular platform, you can do so on TradingView. Go to right-click, settings, and you can change the time based on where you are in the world. Remember, that won't change the candle change over time from the broker, because the candles you're seeing on the chart will be dependent on the broker platform. Okay, and finally I want to talk to you about another method that you can use in your back testing, and that's using a third-party piece of software. Now, there are plenty out there. The one I'm using is called Forex Tester, and I'm on version 4 by the looks of things. I think they're on to the latest version, is 5 now, I believe. But let me say at this juncture, I'm not related to Forex Tester in any way. I don't get paid for any endorsement, and indeed I don't even have to know if you take out a license key with them. I will say that there's a discount code inside our trading room should you wish to avail a small discount, but I'm sure the discount codes are available elsewhere as well. But I do think it is a decent piece of kit if you're serious about backtesting your strategies. It's got two big advantages. The first is that you can have this multi-time frame sync when it comes to scrolling through the charts, so that you can do your analysis on the higher time frame chart and take your trades on the lower time frame chart. You'll see here on the screen I've got the 1 hour time frame on the left, I've got the 4 hour time frame on the right, and every time I advance by clicking the space bar on the 1 hour, you'll see a new candle form. Now clearly every time I hit that 4 times, you're going to see a new 4 hour candle form, because they are moving in sync. And if I just was to put my finger and hold it down on the space bar, you'll see them all moving together, and the price is moving in line as well, both basically the same price on both charts. Great for doing this top down analysis approach. And the other really useful thing about this is that you can actually place trades in the simulated environment. So if you see your strategy rules align, you've ticked your boxes, you can actually place the trade as well. So looks here, we go to orders. Let's assume now I want to take a market order. Let's assume I'm a buyer because we're in an uptrend. I can place my stops in there as well. So I might have my stops below the moving average. I'll have my take profit target, say above the moving average. I click buy. That order is now placed in the simulated market. It's not costing me anything if it loses. It's all simulation. And I can play it out to see how the trade works out. And indeed, you see it took profits at my take profit target. Absolutely wonderful to see your trades actually play out in front of you. And the other great thing about this is you can actually go to the view. Lots of panels in here. But if I go to statistics, then I can actually see all the statistics of my project in play at the moment. For expectancy, total profits, average win, profit factor, expectancy as well. It's working it all out for you, including your risk. So that is a really useful piece of kit should you wish to explore that. Again, I'm not affiliated. So there are basically 3 ways that you can backtest. You've got the cheap, very free version, that's the MT4. You've got the TradingView platform, maybe a bit of a premium on that, and you've got the third-party piece of software as well. So that's basically backtesting. Whatever way you choose, I strongly suggest you give this serious consideration if you're serious about learning to trade. There you go. That's me on about backtesting yet again. Okay, so Oliver and I hope you found that useful. Now you know how to backtest, how to avoid some of those big mistakes. Give me a thumbs up if you found it useful. Give me a thumbs down if you didn't. Don't forget to subscribe to the channel and hit that bell notification. Notifies you the moment the next video has been released. A couple of years ago, I was given one of these as we reached 100,000 subscribers. I see this week we hit 300,000 subscribers. So thank you all that have been subscribing to the channel. Don't forget to follow us on all the socials as well. And don't forget, if you want to join us in our daily live streams, we are streaming up to 6 times a day. You can interact with us, join our trading community, access lots of our trading tools and strategies. You can do so. Take out a 7-day free trial. Let me know you've come from the YouTube channel and I'll roll out the red carpet for you. If that is not your thing, that is not a problem. We will see you next week and have a good week. Say bye-bye, Oliver. There you go. Bye-bye. There you go. Off you go.